Hi, good afternoon. Thank you for joining me today. Using ValueLine's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, as mentioned, we have a lot of time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on ValueLine.com and our YouTube channel within the next 48 hours. To start, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the ValueLine Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by ValueLine's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investment banking business with any company, including the 1,700 that are included in this service. ValueLine does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. As a jumping-off point for our stock research today, let's start with an overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. The following content was prepared by Harvey Katz, ValueLine's chief economist. Several themes are developing as the second half moves along. The economy has heated up, with second quarter GDP growth likely having topped 4%. Powering the economy down the stretch of the opening half were gains in retail spending, led by healthcare stores, restaurants, and the internet, and upturns in industrial production and factory use. Such improvements, along with a bright employment outlook, should lead to further, but moderating, growth in the current half. However, the tariff standoff with China in particular poses risks, namely the threat of further retaliation and even a full-blown trade war. Such a scenario might cool the economy off more than we expect as 2018 winds down. Still, with consumer and business demand on generally secure footing, any near-term impact from the trade disputes should be sufficiently muted to keep GDP growing by 3% or so this half. We then may see further deceleration in 2019. Inflation could be another challenge. To wit, prices were up 2.9% in the past 12 months, the highest rate in 6 years. That uptick, plus a strong economy, strengthens the case for further Federal Reserve monetary tightening, with a third and fourth interest rate hike likely this year. Several additional increases probably are on the table for next year. Earnings, too, are stepping up, with profit growth in the second quarter likely approximating 20%, as many companies are positioned to top consensus forecasts. Such a strong showing may already be priced into the market, so guidance for the upcoming quarters will be watched closely. High market volatility, meantime, is an ongoing theme, with notable swings not only in the key indexes, but with significant rotation among the respective market sectors. Through it all, the fundamentals have remained strong enough to keep any downturns to date brief and shallow. All told, the case for the bulls, namely a growing economy and strong earnings, and the argument for the bears, rising interest rates and a possible trade war, would seem sufficiently offsetting to keep major market moves at bay in the short term. Considering that our outlook suggests that the market may trade sideways for a little while, finding individual stocks that are expected to appreciate becomes even more important. Thankfully, ValueLine provides the tools and information. As for some details in regard to our search today, year to date, the small cap Russell 2000 index has easily outperformed the Dow and S&P 500. Those larger cap indexes have a significant concentration of multinational corporations, and the ongoing trade and tariff issues may hamper their operations and profits going forward. Thus, increasing your exposure to small caps may prove beneficial, especially those that generate the bulk of their revenues and profits stateside. That will be the basis for our pursuit today. But for now, please note that we are currently on our homepage, ValueLine.com. On this page, you can access, free of charge, daily market commentaries, as well as general interest articles that are written by our analysts. Examples of such content are analysis of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. On that note, we are currently in the heart of earnings season, so our website will have quite a bit of content about the Dow components' quarterly performances. I encourage you to read these reports. They will provide you with key insights in regard to these bellwether companies' operations and corresponding stocks. I am now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main home for our core equities products. I can also head to our home pages for our monthly stock selection services, as well as our investor tools. As you know, the point of this presentation is to find a stock to buy right now. So let's go to the screener and start our search. This tool can also be found via the Find Ideas tab at the top. Subscribers have access to more than a dozen preset screens and almost 50 data fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. I am now going to run a screen with the information we have discussed. The goal will be to find a small cap equity that appears poised to outperform the broader market, which, as mentioned earlier, may march in place for a little while. Naturally, let's start with market cap. So I'm going to click on the field and fill out the criteria. Research houses commonly have different cutoffs for separating small, medium, and large capitalization stocks. At ValueLine, we use the following ranges. Large cap is greater than $5 billion, mid cap is $1 billion to $5 billion, and small cap is under $1 billion. To zero in on small caps, I can utilize the sliding bar, or I can type the figures into the from and to boxes. So to isolate small caps, I type 1,000 into the to box, since it's in millions. Thus, 1,000 is really 1 billion. As you can see, ValueLine's database includes more than 3,400 small cap stocks. Small caps, since they are starting from a lower base, often offer significant growth prospects. On the other hand, without the track record and consistent profitability, they tend to be riskier than their larger cap counterparts. Thus, I'm going to quickly remove risky companies, which is probably a sound idea, especially during this period of heightened market volatility. There are numerous risk and volatility measures, but we recommend ValueLine's proprietary safety rank. The safety ranks measure the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. For this, let's focus on equities ranked 1, 2, and 3 for safety, which is average or better. So I click on the field and select 1, 2, and 3. These are financially sound companies in the small cap space, and their stocks have a history of relative stability. For those that don't know, our safety ranks are derived from our financial strength grades and our price stability scores. For more information here, I recommend a read of our ranking system guide, which can be accessed via the investment education section of our site. Now let's make sure the stocks have a history of earnings gains, and I'm going to utilize the EPS growth 5-year field. This will weed out companies whose profits have been stagnating or advancing slowly, and even more important, unprofitable outfits. This will also remove newer companies that don't have a 5-year track record. Normally, I would set the low percentage to around 8% or so. However, since we are dealing with small caps, in my opinion, a greater rate should be used. After all, we want to see significant growth. Let's use 12%. Historical growth is helpful, but I also want to utilize ValueLine's estimates and projections and pick stocks that are expected to continue to advance earnings over the next several years. This is a good time to mention that for all 1,700 stocks in the ValueLine Investment Survey universe, we create 3 to 5 year financial projections. I want to highlight that ValueLine is one of the very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. So let's include projected 3 to 5 year EPS growth into our screen. And I'm going to again set the low bound to 12%. Okay, 10 results. We're getting close. My last field will focus on potential stock price appreciation. Of course, adding in all of the earnings growth and safety fields are great, but in the end, we just want to see the stock price go up. I already mentioned that ValueLine's analysts create 3 to 5 year financial projections. Using these values, we then create a target price range for each equity. For the final field, I want to tap into this and include the projected 3 to 5 year annual total return percentage, and I'm going to focus on the low end of the range to be conservative. I'm going to use 10% as my starting point, which is above the historical annual rate of return for the major stock market indexes going back decades. FYI, it's about 8%. For this, I have to type 0.10 into the from box. Down to 6 results, which is nice and manageable. According to our criteria, these small caps are not overly risky, for small caps that is, have a history of healthy earnings gains, and our bottom line and stock price projections point to sizable increases. Several of these, although certainly not household names, may fit nicely in your portfolio depending on your strategy. However, after evaluating each before this presentation, I'm going to recommend Red Robin Gourmet Burgers, ticker RRGB. Before I go any further, I want to point out that screens can be saved and revisited later by utilizing the button at the top. Let's now get some more information in regard to Red Robin. Clicking on the company name will take us to the equity's digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, and hidden, so you can create your own customized stock report. For instance, and I will go into more depth in a minute, many subscribers feel that the analyst commentary is most important when considering a particular stock for purchase or sale. Thus, perhaps that's the first module I want to see when I pull up the digital report. To do this, I simply click and drag the heading to the top. Another example, since we already focus on safety, maybe I don't need the financial strength to take up such a prominent position. I can simply click and hide the module. Once I alter the presentation to my liking, I can save the changes from the sliding horizontal action bar. The next time I come to this stock report, it will look the way I set it up. I can also apply these changes to other equities. Many of you are probably familiar with Red Robin, whether you have eaten at one of their restaurants or seen their advertisements. However, I do want to provide some quick details about its operation. This information is provided in the business description module. The Colorado headquartered corporation operates and franchises casual dining restaurants that focuses on gourmet hamburgers. As of December 31st, it had 566 locations in 44 states and 2 Canadian provinces. Importantly, and I looked this up earlier, it has less than 20 locations in Canada and thus generates almost all of its sales and profits domestically. This is an important fact since Red Robin should not be materially impacted by any potential tariffs or trade issues that may arise between the U.S. and Canada. Moving on, how has Red Robin stock performed of late? From the total return module, I can see how the stock has done versus its competitors, as well as the overall investment survey. It has clearly underperformed, as you can see. From the valuation module, I can pull up a stock chart. Over the past 3 months, the stock price has declined more than 20%. I'm now going to take a quick look at the analyst commentary to get some information in regard to what is going on at the company. As ValueLine Senior Analyst Wayne Neff mentions, we have increased our 2018 and 2019 share net estimates by 15 cents and a quarter, respectively, to $2.85 and $3.10. Improved traffic is the key to our revision. Management's dedication to its value offerings, combined with its penchant to increase its off-premise business, should help to drive same-store sales higher in the coming 6 to 18 months. I now want to show you our classic PDF report, which is included with a digital subscription, and provide some analysis on why we think RRGN is a good choice. These reports can be accessed from the PDF button at the top right. Just a quick glance at the statistical array, which is the main numbers section of the report, we can see that the company's sales, earnings, cash flows, margins, and shareholder returns are all trending in the right direction. Please note that the bold figures are our estimates and 3 to 5 year projections. In the projections box on the top left, we see that ValueLine expects RRGN to trade far higher than its current price. All told, Red Robin shares offer wide recovery potential to the 2021-2023 timeframe. That said, there are of course some risks here. Red Robin does operate in a fiercely competitive market, and management will need to hit on several of its initiatives for the stock to break out of its recent funk. We are optimistic, but it will certainly take time for these initiatives to bear fruit. On that note, for those investors with a conservative strategy, we suggest waiting for the company to report July period financial results and for management to update guidance before considering taking a position here. You may also want to wait for our next full report, which will be published in August. That said, Red Robin is the stock to buy right now, and we think that patient, risk-tolerant investors could do well buying the equity at the current depressed price. We think it stands a good chance to best the market over the next few years. I hope you found ValueLine's screener and process of finding worthwhile stocks easy and informative. I also encourage our subscribers to utilize the watch list and alerts tools. The watch list allows you to create a list of stocks that you own or are monitoring and view them side by side. As for alerts, you can set up notifications and receive an email or text message when a specific event occurs. These include when we put out a new report, when we change a rank, or when a particular stock increases or decreases in value by a percentage of your choosing. In all, more than 15 alerts are available. These tools can be accessed via the Find Ideas tab. Lastly, I know this procedure does take time. That is why I want to close with a quick introduction to ValueLine's selection services and model portfolios. For those that want a total investment solution, we offer ValueLine Select, Dividend Income and Growth, Special Situations, and Select ETFs. All of these products are published monthly and provide our top picks and sell recommendations for specific investment strategies. Since we spent the bulk of this presentation discussing small caps, I want to mention that the Special Situations Service focuses on smaller companies with 2 new recommendations every month. To learn more about any of these products, I encourage you to call 1-800-ValueLine for a free sample and or trial subscription. You can also sign up directly from our homepage, ValueLine.com. As for model portfolios, part of the ValueLine Investment Survey is the weekly Selection and Opinion newsletter. Along with economic and stock market commentary are 4 model portfolios. Each one has a different investment strategy, is actively managed, updated each week, and always contains 20 stocks. These portfolios are overseen by senior research analysts. This marks the end of the formal presentation, and I will now tackle your questions. All right, first question. When you get to the stock screener tool, where can I find out what each term means? Okay, under the investment education section, we provide an online glossary. So simply you can look up the terms. So for instance, all right, next question, how come you are recommending a stock that has a timeliness score of 4? Okay, for a lot of you who are familiar with ValueLine, or if you're current subscribers, you know that our timeliness ranking has been one of our most popular offerings over the decade. And of course, I consulted the timeliness ranks before I prepared this presentation, but it is just one variable. And I was looking for obviously a wide variety of metrics to recommend a stock. So it's not to be ignored, but just like any other metric, it is just one. I wouldn't recommend looking at any one single thing before buying a stock. All right, I bought CVS and Comcast 1 month ago. I know you liked CVS and Comcast. However, both are down 5 to 8% since then. Any ideas if I should hold on to them or not? I can't provide personal financial advice on a webinar. However, I would recommend keeping up with our reports and supplementary reports to get more information. And remember, it's only been a month. We typically recommend a longer holding period. Is there any way you can find out if a security has a convertible security attached to it? Yes, we offer a convertibles product. And it contains information, data, and analysis on over 600 convertibles. So that's something you can get a trial of if you call 1-800-ValueLine. Next question. How long do you suggest in a holding period? Well, that's going to be very personal, depending on what your goals are. Could be months, years, could be decades. A lot of the information we provide looks 6 to 12 months. For instance, our timeless ranks 6 to 12 months. And of course, our target price ranges are 3 to 5 years out. So that's typically the horizon we look at. ValueLine's products are not geared for day traders. Cracker Barrel was the stock of the month recently, and it's down a few bucks. Same answer. My recommendation then recommends a longer holding period. Just a few days or a few weeks doesn't change my view on that stock. Looks like that's all of the questions. Thank you so much for joining me today. Take care.